Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look on. Take a look at the New Zealand versus US dollar. We're getting ready to start the new trading day in New Zealand, and the day in the New York session or the US session saw the price continue its move to the upside that started in the Asia Pacific session last night and continued into the European session. The move to the upside saw the price extend toward a cluster of moving averages. The first was the 100-hour moving average. The second was the 200-hour moving average. That's a green line in this chart. And the third was this step 200-hour green line, which is a 200-day moving average. So the 100-hour moving average, 200-hour moving average, 200-day moving average, all coming together within 0.6198 up to 0.6221. So about 23 pips separated the low from the high. In between was the 200-hour moving average, and the price extended up to the highest of those moving averages, and have seen some selling pressure against that key 200-day moving average, and the price has moved back down toward the middle. Guess what? In the new trading day going forward, we're going to need to get either above the 200-day moving average and stay above that level, or we're going to move back below the 100-hour moving average. That's the blue line. Move below 61.8 and start its rotation back to the downside. This move to the downside, we did find support here yesterday during Friday's trade against what was a swing area. Now I'm going to have to go back in time to show you where that came from. And if you go back in time to around here, you can see that there is a number of different swing highs and lows going back into this area right through here. Swing high, or swing low, swing low right here. Broke below it. It became a little bit of resistance through here, and then moved above it here, and haven't returned to that level until trading on Friday, where the price started to got within a few pips, I guess, of that level and started to rotate back to the upside. So on the top side, what do we have? We have the downward sloping trend line, which is also in play, and that comes near the 50% retracement of the range since it really goes down to June 29 to the high price here. Midpoint comes in at 0.6230, move above both the trend line and that level, and it opens the door for further upside momentum for this pair. Note how the price on Thursday stalled against the broken 38.2 of the same move higher. Again, this comes from the low price out right here, the June 29th low to the high price that we saw on July 14th. The 38.2% comes in at 0.62727, and it was returning back to that level where the market found the sellers. So that would be another target on the top side. So overall, the New Zealand versus US dollar is in a neutral area right here between the 100-hour moving average, 200-day moving average. We have clearly defined targets on the top side, clearly defined targets on the downside. We also have today the RBA rate decision, where they're expected to increase by 25 basis points. It might have an impact on the New Zealand versus US dollar as well, so it tends to follow along with it. So be aware for that. If it's more hawkish, you could see a further rotation to the upside. If it's more dovish, then look for a break below the 100-hour moving average to give you clues. So there you have it, a look at the technicals that are driving the New Zealand versus US dollar. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.